Alright, what's going on, guys? We're about to take a short right now. NASDAQ, fuck. Alright. Alright, we're in right now for a short. We're risking about 0.5% on this trade. Alright. Is this right? Yeah, that's right. Cool. Guess we're in profit right now. Alright, so it's pulling back right now, but I like that momentum that we saw right there on that break. So I took it as a collapse in EMA entry, but it's also a level 1 reset. Differences I have with the collapsing EMA is that I enter usually a little bit later, and from like the break of the 50, and then as well as I get a little bit of a tighter stop sometimes. So, but it's also level 1 reset. You can see how price action is bouncing off that same support level right there, or resistance level. Right now we're kind of bouncing back up, so which is fine. So let's see if we continue kind of trying to come back up.
Turns out,
I'm sick of Spotify. Alright, we're out now. Off a actually no, it's about I moved my stop like right over here, so it's about to hit my stop. So let's see if it hits it. Alright, that's pretty much it, to be honest. I'm just looking for that continuation to the downside right now on specifically NASDAQ, nothing else, to be honest. Let's see if it kind of continues with that lower high. If it doesn't, then it is what it is. You can see that Fibonacci level, that's just consistent on that, but looks like we're about to get stopped out in a second. If it wants to come back. It's not level 2. I'm about to add in right now for second position once we break right now below that previous low right now. Let's figure out the correct H1 shifts and other setups. Correct shift. So I don't know if you're in the course, but if you're in the course, you would know exactly what shift that you're supposed to. Because I post all the graphics in the course, so you should know. So this isn't level 2. This is level 1 reset. Level 1 primary is going to be off an actual. It's the primary of the move. All right, let's see if I'm about to see if I can re-enter over here. All right, I'm adding in. Target is 2R. I'm about to lock my stop and break even in my first position right now. And locking my stop in a second. Alright, break even on the first entry. Second entry, we're about a little bit almost at 1R right now. I'm waiting for a continuation. Let's see. I don't know if I could go ahead and try to place my stop to break even with this 800 EMA, but we'll wait for a 2 execution R. Actually, right now, yep, we just have a 1R on that first position, so I'll just stop and break even on that, and then we're about around 0.35 R away from 2R. Yeah, so either this wasn't even level 2 either, but I took it as continuation toward the downside. Now how I can do that because I'm being aggressive right now. The reason why I'm being aggressive, we're in a hot volatile market. You know, higher time frames confirm that. My system confirms it. So I'll be taking a little bit more risk. Now I'm not going crazy right now, for sure. Yeah, I'm not going crazy. There's a difference where I'm not gonna like freaking go crazy with my entries and risk about 2% on each entry. Each of them is just calculated risk, but I'll be taking a little bit more aggressive entries, a little bit lower probable entries as well. But the whole basis of my system is I trade momentum, I trade volatility. That's why I've been trying to get all my literally like thousands of trades to kind of give me an accurate edge ratio. But I'm pretty sure, especially on a hot market, that edge ratio is very key. It's probably going to be from what I've seen so far, it's a high number. It's just because whenever it hits that level, breaks over that specific level, that mechanical level, it's just you see that instant volatility pop toward the downside. So on average, 1R is fairly very easy to get. But I'm not looking to get 1R. I'm looking to get 2R, at least minimum 2R. Because honestly, like that's the whole point of trading. I'm not gonna just trade just for 1 times my risk. I know some scalpers will want to do that, which is fine for them. But I mean, like that's how you get a skewed. Like people don't really understand statistics. That's how you get a negative skew in your statistics. So you may have a little edge in the market, but if you just fuck up just a few times within a month, you could possibly lose more than 10% of your account. You can possibly lose 20%, 30%, maybe even blow your account because of that negative skew. Like my system doesn't have negative skew because I don't trade. I don't trade like just to get 1R. I make sure to lock myself at break even at 1R. I'm fine with that. If I hit 1R, then I'm basically done. I'm basically hitting my stop at break even. Yeah, you'll get to that part, Zach. I'm not gonna go over like specifically the parameters between my entries, but this wasn't a level 2. This was actually a level 1 reset, but I took it after level 1 reset from a collapsing EMA, which is one of my newer systems that's coming out within a couple of weeks. And just like that, look at that. Look at that volatility. I could see it bouncing, coming all the way down here, for sure. So we're about to hit take profit, and a second. Yeah, literally just bounce off my TP. And now we hit TP. Alright, so 2R, first entry. Very easy, guys. Literally off the market open. What is it? 8:45, so 15 minutes off the open. I already made $1,000. Two times my risk. It doesn't get easier than that, to be honest. I can continue on and taking more entries if I want, but right now I don't see. The last couple of days has been a little bit choppy, so for me that's a little bit of a kind of I would say to look at to see why. Like if it's choppy, like really choppy on both sides, so it's ranging and stuff, I usually just don't like to trade more aggressive entries. I like taking a couple of entries, but not too much. So for the people in my course, that's not a level 2, but you could take it as a level 2, just be really aggressive. But having that TDI MACD value is key, so you get that both on both ends right there, so it's very nice. You have this little order block here as well. Not only is it bouncing off for Fibonacci, it's also bouncing off the previous high of today, which is a level. If you believe it or not, that's a level. Today's high, today's low, it's a level. If you want to be more technical, we can look at the higher time frames. And see, just a very kind of specific EMA. So obviously it's bouncing off 21 EMA, just can't, because with these kind of drops, it just continues on from that 8 and 21 EMA, just bouncing off that. So, order block, Fibonacci level, little bit of an aggressive entry, right? But it's the same pattern, guys. Like literally, like it's just same. Like I'll literally like if I hire some people, I need to like come out with a bunch of statistics. But I could give you almost a guarantee that with these same patterns, there's probably a 65 hit rate on that. At least a 65% hit rate whenever we're in a trending bull market or bearish market. Like market shoots up, there's divergence forming, Literally, the market opens right over here, guys. It shoots up, and then once it shoots up on a downtrend, on the higher time frames with divergence. Not only that, but divergence coming from here. Just it's not a coincidence. It's just statistics. Now this thing can definitely for sure bounce back up. That's where I have my locks up at break even, so I can't lose on the trade at all. There from that recent higher low, it's bouncing off that fib, so it can definitely bounce back up. So, is what it is. For this second entry, I'm potentially gonna hold it all the way down to here, because I risked about around 0.25% on that entry. Yeah, a little bit less than 0.25% on that kind of skeleton entry, which I can because it broke toward that EMA. A little bit aggressive because the 800 EMA was there, but I risked less on that for a reason. And then taking that specific level all the way down toward this level right over here. But it looks like it wants to bounce off that fib, so we'll see. Alright, but to be honest, for today coming to Friday, to the market close, I could kind of see it, like, I don't know what to expect, to be honest. So we saw that big drop. I got stopped out of break even on this trade, on the remainder of my positions, but this is last night's trade, collapse in Dragon. So collapse in EMA. So potentially, if we break toward this low, we can probably continue going lower. But if it wants to make a higher low right over here, then I could see it coming back all the way up to the 1 hour 50 for a mean reversion, possibly off the higher time frames. And then we'll probably continue going down off the market before the market close or around the market close. That's generally how these patterns work sometimes. Sometimes the moves happen, the large move happens like throughout the end of the day. Yeah, I chose funding talent because there's a way that I was doing it where I could get funded really fast. And I was going to use, and it was cheap, it was dirt cheap. It's like an arbitrage system where I was able to get a lot of capital in a short period of time. Because with FTML, your average time to get actually results from a funded account will be around minimum like 2 months. Could be even longer, right? So, for me, I chose funding talent because I was able to the challenges were so easy. I could pass them literally one day. 8% and then 4%, that's pretty easy. Just risking 2%, you make about 4R in a trade. Do the math there. Then for the verification, it just takes you one trade for about 2R to basically be done on the verification. So it's just so easy. So I was taking advantage of that, and it didn't really work out in my hand. So my plan was, using some of that capital to fund my traders, some of my elite traders in my community, but it didn't really work out that way. So, it was just fucking move on. That's all you could do. Just take the L and move on. Not just me. I know thousands of traders got fucked up. One of my friends, Chow, he lost that 200K account. He's pissed. I would be pissed too. I am pissed too. That's not what I want. About 4 execution R. That'll be my initial take profit right there. So 4 times my risk. I still have my entry from from yesterday. Still short. Literally, I call that bounce. How I did it is just because I had different accounts trading the same entry. Some of them I basically closed. The other ones, since I had a little bit more profit in there, I could just leverage it and being able to hold up those entries a little bit longer than usual, and then swing it all the way down. That's exactly what I did. I took that entry right over here from those wicks, bouncing off the 200 EMA 1 hour 50. Precision right there. But it's just me. I've been trading the markets for such a long time, especially indices. Like, I've been trading them so long. Like you just see the patterns every single day by eye. You know how exactly, especially my system. I know exactly the ins and outs of my systems very easily. The MACD, the TDI, the way price action moves between specific kind of movements on the TDI, MACD, price action momentum, price action candlesticks. Like, it's just experience gives you an edge. That's just a fact. You know, you can have the best system in the world, but you can't beat experience, to be honest. Like, you have to put in the work every single day and gain that experience, because you're not going to know stuff that most traders don't. Now, you could definitely be profitable as a trader in a short period of time if you do it the right way, but at the same time, you know, you're a little bit off edge in a sense where you're, you know, other traders who had more experience than you could definitely, you know, number one, generate higher returns, and they have an actual personal edge, not a statistical edge, which is different from like a system to, you know, personal discretionary trading or discretionary analysis of a specific instrument. Like, just like how I call that top on Nasdaq, literally from like all the way down here. Like, I call that top, and you can see my entry on Instagram. You know, from what I was seeing, that I saw a decrease in momentum, of bullish momentum. I saw an increase in volatility. It was literally the month of August. I literally called it out. Like, I knew that there's a very good possibility on us entering in September, since we were having such low volatility it's such low volatility on the summer months. I knew that, you know, once we started getting to the September months, we're probably seeing an increase in volatility and an increase of kind of interest. And I mean, I wasn't the only one who thought stocks were overvalued. So, you know, from that point on, I entered like on this counter right over here. Call that top. There was 2 days trending down. It was a Friday, I remember. I took the collapsing dragon about a couple hours before the market closed. I didn't take a level 1 risk or anything like that. I took just a collapsing EMA entry. Kept that entry. And it just basically rode all the way down here for a ride. Down about 7% in total. Yeah, almost 7%. Or about like 10,000 pips. But you just know stuff like that once you have an edge, an actual personal edge. Same with GU and GJ. Literally, how did I trade GJ and make like 4R my GJ trade? Just having a personal edge. Like, you can't teach that. I can't teach that. You know, because it's just there's so much things that go into that. There's no way I could teach an edge. I could come out with statistical edges for a system. Yeah, that's easy. But teaching an actual trading edge from experience, I can't teach that. There's no way. Only you can teach that to yourself. Not me. But look at this trade on GJ. You know, just an easy 4 execution R. I made like 2R, 66 pips in like an hour yesterday where I entered. You know, I'm not just a scalper. I'm a swing trader if I see those opportunities, and literally bounces to that order block and comes back up. But this was a great trade. Just, you know, very great trade off our swing system. Yeah, we bounce off this level. We bounce off that divergent low. We also bounce off the 1 daily 200 EMA. Yeah. but it was still a very decent trade. So just gonna journal it, and continue on with it. So, yeah, just a very nice entry. In total, I made about around 135 pips on that, so pretty decent. Yep, that's all you can do. Move on to the next trade. Alright. Nasdaq is trying to continue down right now. There's a reason why I'm up about 18% on the month. Like now, I mean, in total probably around 24% on my accounts, 25. I think maybe 27. I could have made so much more though. I think I for sure would have hit a 40% if I was a little bit aggressive in the beginning on September. But if I would have hit that 40% and 40K in profits too. SMH. Kind of just want to fly down to Canada and just meet this Jessica, because I have beef with her, to be honest. She has beef with me too. Dude, I fucking knew it, dude. I should have just been aware more. I shouldn't have been just freaking greedy. That's my fault. We all took an L. Ooh, that volatility, let's go. Literally, like, fuck, man. Pisses me off. I lost 2/3 of my whole prop from capital portfolio with them. And then I had like 2 more challenges, 200K in the way as well. It's like halfway done with those challenges. It's pretty dumb. Fuck you, bro. We have divergence forming right now, which is fine, to be honest. I don't really care, because we took our primary position out. To be honest, I'm pretty much done for the day. It's a Friday, so there's no need to be really aggressive today, unless I'm seeing that pressure. But I'm not seeing that right now. Some people trade with price action only. I don't really understand in a way where, what sets you apart from not even thousands, bro, millions of people. Gosh dang, millions of people trading the same instrument. Like, do you know how big the stock market is and how big Forex is? What makes you different from every Forex trader that trades price action and Fibonacci levels? What makes you different? You have to do something very extra. You have to work 10 times as hard as those motherfuckers. There's no edge in that. There's no true edge in that. There's a reason why hedge fund managers don't trade price action strategies. They use math, right? Now, they still use candlestick data for specific stuff. Like, I use it. That's how I created my DC swing system. I use it I put out daily chart patterns and I look at the data behind it. But, it doesn't make any sense to me where, you have to have some kind of edge that not just makes you money on 1 or 2 trades, but keeps you consistently profitable. Sometimes people underestimate like trading edges and why it's really important to have something like that, something unique as well, compared to other trading systems and strategies. Because you gotta be different. I That's why I'm always creating systems too. Sometimes the system will underperform because market change. A lot of people don't even believe in that. Especially in the stock market, that's something that you have to always adapt. Forex markets, I would say right now. Yeah, I would say right now, it changes a lot, right? So I remember back in what is it, 2017, 2018, swing trading was much more easier. From my personal experience, I was a price action swing trader, and like whenever I started like 2 years whenever I was 16 years old or 17, like my first since I started since I was 15, like 5 years ago, I was a price action swing trader. So the first two years I was a price action swing trader, and I felt like it was a little bit easier. Even in the summer months, I was hitting actual good returns, and I wasn't even doing any like higher time frame analysis. Just price action bounces off the higher time frames, and then just swinging that to a higher low. So it's much more easier. Like I feel like markets change for sure. Underestimate your system thinking that it won't. It'll consistently give you that same return year after year. I think that's the most stupidest thing in the world, to be honest. You can't expect that. The market can do whatever it wants. You can't expect your system to perform the same year after year. You can have an estimate of what you're looking for year per year, for sure. Like for me, like if a system is underperforming for more than a quarter, whether it depends on the system. So if it's a swing system, then I probably will switch it up to a different kind of swing system that fits more of the criteria of what's going on in the markets. Whether it's a Forex, Forex is a little bit different because you're trading different pairs. And for me, my true edge comes into whenever I trade the specific pair and knowing exactly how it moves on the higher time frames. Then I make that system based off that as well. Just like the DC swing system, I based it off GJ because it has over 2.5 years of data. Actually, a little bit more than 2.5 years of data, but so much data about how GJ moves on a daily basis. I don't know. Like for me, I'm here not to just be here to make money. I'm here for the long run. So I think long term always. It's always better to be prepared than underprepared, and then you basically, things can happen in a flash. Especially right now, like once I start managing, once I eventually open up my big ass fund, it's gonna be really big. On this next upcoming investor run, once I open it back up, whether I go to the army or basically wait, I could build up my track records and then give investors really a good run. So, and then I also have a really good mentor in the field with a multi-million dollar head fund, just a ton of money and a lot of kind of opportunities because there's always investors looking for newer opportunities, hedge fund managers to manage their portfolio with a different asset. That gives them a unique kind of a uniqueness to this portfolio, diversity to their portfolio. Now they're not going to invest like 30%, like half of their portfolio if they're a very big, kind of I would say like one of your average big investors, but they're always looking for new opportunities. They're always looking for new hedge fund managers to give them a pretty good return. And if it's just, I'm gonna make a video about this in the future, but if you want to manage money in the future, you gotta build yourself a track record. How do you do that? Well, you can't do that by just trading on a trading account. You gotta have proof that you actually manage professional capital, whether it could be friends or family. You could kind of start off as a hedge fund incubator, where you basically kind of label it in a certain way where you're not an actual hedge fund. You're not actually trading with investors' money. With I would say looking at it again, investors' money. You're trading basically friends and family, but you make it a certain way where you could actually get credit for that. You can actually go to you can audit your track record, and you can show that for potential investors, future investors, where you could actually, start off like an actual real hedge fund. But as a hedge fund incubator, you basically start off as a general partnership, and you get your friends and family in that general partnership to invest into that specific fund, and and then from there you could basically trade their money, and you don't have to go into like the crazy stuff of you normally would with hedge funds, with like the PPM, the private placement moratorium, all those. The documents are really expensive, so it could prevent you kind of a lot of money in the beginning, which I probably would recommend for most people who don't have a lot of experience and don't have a lot of money to start off with. Start off with that, build a track record for about a year or 2 years, and then once you're a little bit more serious, and once you could find a network. Like the whole thing about hedge funds is it's about managing money and giving good returns, but it's also networking. It's also finding investors. How could you manage a fund if no one wants to invest in your fund? You have to have people want to invest in your fund. So you have to network yourself. Hedge fund managers are good network people. Go to New York. You see them all the time. They go to bars, and they go to restaurants, they go to fancy events, but for a reason, to network themselves. You really gotta be very attentive on what they're doing. So if you're really wanting to start a hedge fund, I would recommend, an actually big hedge fund, going out and being into like a place where a lot of people, like-minded people, are there. So either Texas, LA, New York. Build yourself a network. Then, they'll want to invest with you millions of dollars and etc. Something like that. But yeah, I'm gonna create a video about that, because honestly, like, there's not that much videos about educating on, actually becoming a hedge fund manager. And like, I really want to create very professional hedge fund managers from the retail space, because I know we can do it. I know a lot of people are professional. Some people aren't. Some people don't treat trading like a gambling kind of a hobby or problem or whatever. But that's not what I'm talking about. I'm talking about actual people who take trading very seriously and as a profession. I want those traders to manage my money. I want those traders to work for me, and I want those traders to come out eventually and start off their own hedge fund and build the next generation of actual hedge fund managers. Because honestly, like, you don't have to have a degree to make money. You don't have to have a degree to generate returns for your investors. You don't. A little bit choppy right now. But yeah, I mean, there's several ways to build up a track record. You could either go with a prop firm, which I would recommend building up a track record, and not FTMO. Don't do funding talent. Like, next, like an actual prop firm that you sign a contract with, and which ones you actually sign a contract with. From my knowledge, FTMO gives you a contract each time. With Nations Trading, with all these other prop firms, I'm not really sure because I don't have experience with them. I don't even know I don't think you signed a contract with MyForex funds. Someone let me know about that. But I know FTMO literally since I signed my first contract almost like a year and a half ago. But signing a contract is very nice, and then looking over that stuff, because that could give you legitimacy whenever you're not only provide an audit of your track record of you managing their capital, but also, actually, I think Nation Trading does do it, because they manage live capital on your trading account. It's a little bit different from FTMO, but I think they do. Let me know about that. I'm looking to do a Nation trading challenge in the future. But anyways, yeah, you build a track record from a prop firm. Minimum 1 year. Don't give them 6 months. Do at least a year, minimum a year. A track record of you managing prop firm capital. That's a good start. That's a very good start. I would also recommend something called Collective 2, which is a platform for hedge fund managers. Um, to basically come out with trading strategies and perform on the live markets with it, either on a demo account, simulated account, or an actual live account. And then you have investors there looking at that, potential hedge fund managers looking at you, looking at those leaderboards every single day, every single week, looking for potential talent. And eventually, if your trading strategy goes very, generates a decent return, you'll have number one, investors invest into that in a way where they pay you about $100 a month to kind of copy your trades. Not really. It's kind of just managing. You're basically managing a portfolio by just taking trades. You have like a unique way of doing it, Collected too. Not only that, but you also have again, hedge fund managers looking for you looking for talent all the time. So you could either have a licensing deal, a partnership to for them to basically have like these hedge funds have an incubator fund where they're basically have like 10%, 15%, 20% of their portfolio, just basically trying to hire new talent, trying to hire professional hedge fund managers, and then they use that capital to fund specific traders, specific managers, fund managers from Collected too. So it's a good way to start the track record, especially saying that I've had investors trade with my system or strategy and they made money consistently. I have a track record of returns here. Collected 2 has a very professional way of auditing the track record as well. And not only that, but you could also get as well as potential people looking for you, looking for talent. And I'm not talking about your little hedge fund or whatever. I'm talking about real hedge funds, guys. Multi-million-dollar hedge funds. It's big stuff. It's a big leagues. But that's one way to network yourself. Network your kind of systems and trading strategies. Look at that move. It's about to hit my TP. I just hit it right now. Probably gonna bounce off that TP. I mean, off that level right there. I'm gonna move my stop to the recent higher low. And I think I'm gonna take partials. Shit. Actually, I think I'm gonna close a little bit more. I think I'm closing a little bit more. I'm closing about more than half because it hit my level. So I'll just keep a small piece in it for the ride, and then I'll basically hold the rest all the way down to I don't know wherever it wants to go. To be honest, I don't really care. But what an entry! So that specific entry goes about in total 3.87R. So that's a good return. First entry 2R, second entry 3.87R. Pretty good. Consistency right there, guys. What the heck? What are these entries for? That's my break-even trade. So I'm up about 3.8%, and that's just because not from this trade specifically. I made about 1.4% on these trades in total, but it's from basically GJ and Nasdaq 100, my entry yesterday from that collapse in Dragon, because it went up about like 6R. So very nice way to end the week, to be honest. And it's just consistency. Like I've been doing this for such a long time. And if all my members out there too, as well, dude, you guys know how basically conservative I was during the summer. I waited. I basically waited for the opportunity, and this week I executed. I could have executed a little bit better now, but I fucking executed that shit. So I'm up 18, like around 20, more than 20% this month. You know, there's a time to be aggressive. There's a time to be conservative. Most people just want to be aggressive 24/7. It's not how the markets work, buddy. Markets change. Markets change. That's why I added that feature in the course where, you know, how you could find different kind of market changes, market conditions, market swing highs and swing lows, basically. And obviously, the summers are always going to be so slow. Like, even in Forex, it's slow. Summers are always slow. It's a bit different for me because I came back from infantry all of a sudden, and, you know, fucking what? I saw that, you know, markets were much more slower since whenever, before, like, you know, before I went to OSIT, markets were much more better conditions than, you know, when I came back. So it sucked, you know, not seeing the same level of volatility, but I just waited. I didn't, you know, be impatient and try to be aggressive on each entry, risking like 2%, 1%, and, you know, just being really aggressive. That's how you lose money. You know. On the summer months, I average about 3%, 2 or 3% each week. Not a lot, but at least I'm not losing money. Totally fine with just having smaller returns, because eventually throughout the later months, I'll probably make twice as much, 3 times as much. That's exactly what I'm doing. So these are my trades. So first entry, 147.0704, shows right over here, 147.04. Like right there, so what's right? That's my first entry, and then I got out at 14655, which was 2R. So what's 14655, 146? Yeah, so right over here. So I got out at 2 execution R, right over here, and then my second entry, I basically took partials, $300, 0.30%, and then another 0.25% on that. So in total, 0.345. In total, about 1.4, 1.5%. On the day with this position still going on right now, up about a little bit small, about 0.15%. So, but that's still pretty good. You know, just consistency every single day. So in total, on these 2 trades, total execution R for the day, it's about 4 execution R plus 4. What the fuck? Oh yeah, so about 8 execution R in total. Look at that entry as well. Very clean. Do I go live every day? I try to, but it's not a guarantee. Like today, I barely even fucking slept. I only slept like 3 hours. I'm only going through this day with coffee, but yeah, not every day, to be honest. I really don't have. I personally don't have all the time throughout my day to do lives every single day. I try to at least 30 minutes to an hour. Worst case scenario, I'll just basically do like a recap. How much was I risking here? I think 0.25%, right? Yeah, around 0.25% on the second entry. Look at that, we just blew past this level. That's why I kept the piece in. Alright. So this thing could continue going down for sure. That's why I kept it. And I still have my second entry for the day from Friday. It's too easy, to be honest. It's just, when the market's this hot, it's just so easy to make money. It's so fucking easy compared to the summer months. I love stuff like this. I love the hot market. Whenever the markets are more volatile and hot, because you can just make so much money. Especially like if I'm only risking about 0.5% on average. Like when I start risking 1%, that's an easy 40% right there. Heck, I made 20% in the last 2 weeks, or like this whole month of September basically. A little bit more than 20%, just risking 0.5% on each trade. Not even 1%. Imagine if I risked 1%, I would have sure been up 40%. Look at that entry, bro. This is on Friday's entry. Yeah, you guys can see that shit. Fuck. Look at this is the 4-hour chart. I don't know if you can see that. No, you can't see that shit. Oh well. I just posted a fucking screenshot. But yeah, that's such a very nice entry. That's like precision right there. Sniper shots. And to be honest, like I made most of my money within 15 minutes of the market open. The market open right over here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, literally 15 minutes after the market open, I started live streaming. I made $1,000, so I made most of my money there, just like that. 15 minutes a day keeps the 9 to 5 away. That's why I love trading indices more than forex, because you can't make that much money in 15 minutes with forex. Fuck. Yeah, this is my entry. So you can see here I entered on the on yesterday on the market open. Bounced off the 15-minute 200 and 1 hour 50. Entered right there. And you can see that drop. It's like 10R right now. Oh, I gotta close partials on it too. I still have that entry from like what? From 4 weeks ago too. I'm holding it. Market's gonna go at least 10% down in my opinion, so we'll wait for that. But that's pretty much it. I'm done. I mean, it's just that, guys. You guys see this every single freaking day. Same patterns every single day. It's just consistency. I've been doing this shit for a long time, so I've been consistent with it. Where most people quit, I didn't quit. I continued on, gaining an edge, gaining statistical edge with my systems. So it's all about it. So let me know if you guys have any questions. Check out the link in the description for the Scalping University bundle. I really want to help you guys out with, I think what I provide to the community and to the industry is a very unique perspective of scalping in a systematic way. Because most scalping has negative skew strategies, which basically means that there's a potential for you to lose a bigger amount of your account if it just takes a couple of consecutive losses because it's negative skewed, right? And, I provide an actual statistical edge, actually statistics behind that stuff, not just my personal trading stats. I actually provide trading statistics behind the system. And I think that providing these, the unique way of how I look into the market with these indicators, with these unique stuff that I use, it gives me an edge. there's a reason why all my indicators are on the screen because they give me a statistical edge, an edge, right? The MACD, TDI, the ADR, the exponential moving averages. They're not just indicators. There's a reason why I'm trading each of them, right? So let me know if you guys have any questions, and I'll see you guys in the next live stream, hopefully on Monday. And yeah.